Holy mozzarella. Just a quick update, Facebook stock. I posted a video about it yesterday and today it went up. It's about 16%, so from 143 to 167 I think in the after hours. So it's looking like it's on its way up, and I do think it still has quite a bit of growth. It's probably, I wouldn't be surprised if it was over $230 sometime by year end. Now, I don't know if it'll hold this price for this week, so if you're like if somebody's likes to do quick trades on stocks, then tomorrow might be pretty volatile. So we'll see about that, or it might just keep it going up. We'll have to wait. But that said, yeah, I just thought I wanted to update you on that. Now, this is Am I Rich? My name is Keith, and I thought I'd talk about today's stock, which is MTY Group. Ticker symbol MTY. It's a Canadian company. I really like this company, and I have owned it in the past. Made pretty decent profit on it, so I mean that just adds to my liking of it. But what the company is a franchising company, and they have several franchises that they have acquired. So they kind of a serial acquirer of franchises. They own several popular franchises in Canada and I believe across the United States. Companies like Mucho Burrito, Taco Time, Extreme Pita, Pinkberry, Sushi Shop, Villa Medina, Grab a Green, Jugo Juice, Muffins, Timothy's Coffee, Van Hoot Coffee, lots and lots of franchises that they own. And if I go to the shopping mall, honestly, I see a lot of people in these fast food chains, and I don't know, they seem to have pretty good selection. So now the stock price right now is around $70, and that gives you a PE ratio of about 16. The forward PE ratio, I don't know if this is quite correct, but they're expecting about 22. And a price to book ratio of 2.8. So this is kind of middle of the road for most companies. It's a company with just chugging along with no real debts, no major threatening debts, I should say, are usually around the 22 range for PE, or maybe down to the 18, kind of depends on how the market's doing. Forward PE of 22 is a little bit high, so it's kind of a hesitation kind of PE, but you'd be nice to be around like 16, 18, somewhere in that range, or lower would be a better price, typically. And then its dividend is 0.9%, which is not a really strong dividend. It's okay, but nothing amazing. So what makes me really excited about MTY, and to kind of throw it out there as a potential stock that I think is cheap, is its 5-year growth rate. Its 5-year growth rate was about 26%, so that's pretty good. It's just a kind of a collection of a whole bunch of smaller franchises. So how have they done this? So the secret of this is that they've had this ability to acquire franchises at the right time, like just before or just at the beginning of a trend in society. They've kind of jumped on board and grabbed franchises that really have helped with that. So when people were trying to get really healthy in society, they started grabbing things like Jugo Juice or Yugo Juice anyways, and that's like a green smoothie kind of company, or green juice kind of company. And when frozen yogurt, it used to be popular with Yogenfruz, which by the way they used to own, and they dished that off, but they saw that there was a new trend emerging with people liking frozen yogurt again, so they got things like Pinkberry, and they've done really well there with a lot of these companies. So that's been their real key to success, is that they've they are a bit of a serial acquirer of companies, but when they acquire companies, they seem to have kind of a pulse on what people want. And the main man behind this was Stanley Ma. Now, the reason the stock price, it used to actually trade a little bit higher, but the reason I think it's kind of been not growing as fast as the company has been growing is because last May in 2018, Stanley Ma decided that announced that he was going to step down as the CEO of the company. Now, in November, so he has stepped down as of November of 2018. But they were already planning this a long time before that. So anyways, when they mentioned this, or just before they announced this and around the time they announced this, the stock really hadn't done anything exciting for a while. It did pop up a little while after, and again, it went down as a little bit with all the stocks kind of in the recession, not the recession, but that big drop last year in stock prices. Not as bad. It didn't do as bad as many other companies, but it was kind of a not as fast of a growth as it has been. And yeah, so now is kind of the period where the new management takes over. Now, just to keep in mind, so my whole thesis is that they have a strategy that's well ingrained in their management on how to acquire profitable and trendy fast food companies. And I think this is likely to continue because Stanley Ma, not Jack Ma, it's Alibaba's guy. But anyways, Stanley Ma, he's still going to be on the board of directors, and he will still be helping people along the way. And the new guy, I think Eric Lefebvre, he's been involved in a lot of the new acquisitions, and they've turned out well, and they've been doing well since then. And like I said, when I go to the malls, I see people lined up at a lot of their franchises. So I see this company as not an absolute moat, but a kind of a semi-moat. I don't know if that's realistic or not, but so I can see the maintaining the growth. Now, whether that's going to happen or not, that's, I guess, the bear thesis is, if for some reason the new management, even with the help of Stanley Ma, can't continue to find good franchises, then they'll probably start to dwindle, and they won't have as much earnings as before, and the stock price will either stagnate or drop. And so that's kind of a bad case scenario. Even in a recession, though, I think a lot of these franchises, like fast food, they typically still do okay. And this company, it's not, it doesn't have like a negative equity like something like McDonald's or Yum Brand. So I think it's really an interesting franchise company to look at, and I really would like to buy it. I saw it at like $60 around New Year's time, and I was thinking about buying it. I was thinking, well, we'll kind of see, maybe at the end of the month we'll buy it, but now it's at 70. So honestly, I think probably the next 3 to 6 months it could go up, but I kind of see it as like a unsure period about whether the stock will shoot up or not. So I'm gonna hold off until at least 3 months, and then maybe to a reassessment, I think, on the stock. If I did own it at this time, I would probably hold it. I still think within a year or so it's very likely to go up. I just think there may be, if the stock dropped down below $66, I'd probably also consider this is a decent buy, or even back to where it's $60, even better. But yeah, so that's kind of my thoughts. I don't know, what do you guys think? Do you guys have any thoughts on MTY? Do you guys think that Eric Lefebvre can keep things moving along at a good pace? 26% growth for fast food, it's not bad at all. And You know, it really could be a hidden gem, but I guess the other possibility is it could crash. What do you guys think? Do you have any thoughts on this? Do you think Stanley Ma was the man and now things are totally doomed? I'd love to hear your comments. Anyways, thanks a lot for watching, and yeah, I'll see you in the next video.